Good morning, traders and investors. My name is 𝗧𝗺, and I'm the Senior Strategist for �wealthPress. Today is Monday. It is June 28th, and it is the last trading week of June of 2021. And what do I always say? Let's get into it right now. The markets are fairly fragmented. They're near all-time highs. They are fairly stretched out. But I want to go through global economy for you, and then we'll get into the morning's trading action. But first, just so you know, markets are a little mixed. The S&P's up 1, the Dow's down 42, the Nasdaq's up pretty good though. We're still not opening for about an hour and 35 minutes or so things could change. And let's start off with global economy. So Wall Street hit new highs last week, and they are stretched out. Those markets are stretched out right now, folks, as investors looked ahead to manufacturing indicators coming from Japan, China, and South Korea, which are crucial right now. Crucial, because those are big export grounds. Investors have been encouraged by progress in Washington on an infrastructure spending plan which followed a recovery from the jolt markets last week, experienced when the Federal Reserve said it might start raising rates. As you could see here, the bond market, as soon as they said that, the bond market started going down and rates started going up. Remember, there's an inverse relationship between bonds and interest rates. So interest rates are in fact going up slightly, but they are going up. Investors are looking ahead to monthly surveys of manufacturing activity in Japan, China, and South Korea. That's on the plate this week. Markets or production is recovering from last year's plunge, but faces shortages of processing chips and other disruptions. And I think you're going to see another major disruption in the product supply chain over the next month. Don't be surprised if you do see that. Really, don't be surprised. Markets have swung between optimism about the recovery, supported by the rollout of the vaccine, and unease that the Fed and other central banks might feel pressure to pull back stimulus to cool rising inflation. Again, if it's too hot, it's really good, but it may be too good, so they may back off. If it's a little warm, they may say we're going to just let things go. So it's a situation where the Fed got themselves in a corner by lowering rates so aggressively before they needed to. And I told you that would happen about a year and a half ago, but they did. And now they've got themselves in a corner, and now when the economy is getting really good, they don't really have much, or slowing down, they don't have much of a control mechanism, which isn't really good. On Friday, the Commerce Department said one inflation measure closely watched by the Fed increased 0.% in May and is up 3.9% over the past 12 months, well above the 2% Fed target. 3.9%. We're getting hot, folks. We're getting really hot. As Friday, President Joe Biden and a ground of senators agreed on almost $1 trillion 5-year plan on spending for roads, railways, and ports, and that should benefit manufacturing, which I'll talk about in a little bit. Now, as I showed you, the bond market's not really doing much. It looks like we're going to head back towards the 50-day moving average, which will put increased yield on the bond market and pressure on the stock market, which means we may cool off based on what we're seeing right here. Now, as far as the agenda for the week, just so you guys see what's on the plate, we've got consumer confidence tomorrow. Consumer confidence on itself is not a huge report, but consumer confidence gives us a good indication of how retail sales is doing. And retail sales makes up about 2/3 of the economy. So that is a very important report. Then the other big report we have is jobless claims, manufacturing index, and employment situation. And most importantly, if you're looking at the export-import, the international trades in goods and services. So we're going to have a really good idea this week of how well the economy is humming along, because we're going to see the jobless claims, the employment situations, and most importantly, consumer confidence. Consumer confidence is a very understated report. It's actually very important, because consumers, as I said, make up 2/3 of the economy. Now, looking at the indices, as I said, we're kind of mixed a little bit all over the place overnight. And if you look at the S&P right now, let's quickly take a look at it. You will see that it's near all-time highs. But again, notice this listless trading action with very little volatility and the divergence we're seeing. It's not happiness. And if you look at the QQQ, and I showed you last week, I don't want to go through it again, but there's a major vulnerability in the Nasdaq, because the number of stocks that are taking the market higher is declining, actually. Notice from your all-time highs, I want to show you this. It's too good to miss by. We made all-time highs 2 days ago, and we're staying near there. But if I show you momentum levels, you guys are going to love this. It's amazing. But the markets are really being held up right now by less stocks than ever. I mean, look at the number of stocks trading above the 50-day moving average. You'll see the number pop at you right now. Look at this, 72%, right, in the NASDAQ 100. The number went up really, really high. We're near all-time highs. But when you look at the line chart, you will see that on April 15th, April 15th, momentum made all-time highs. We had 87 out of 100 stocks trading above the 50-day moving average. We right now have 72%. And the market is actually, let me just take you there real quick. It's actually higher, not lower. Let me just really quickly show you that. I mean lower, not higher. So you have higher prices, but momentum levels are lower. So you have less stocks trading higher, but you have price moving higher, which is not a really, really good indication. And it's telling us that momentum levels are really holding this thing up by less stocks than they should. So expect the NASDAQ to cool off over the next few days. And the divergence and the RSI, it's just too much too fast. And again, with interest rates rising, you may see a cool off. Now, looking at the stock fetcher code, let's look at all of the 11 indices. Financials are looking really good. If they can come above the 3750 level, we should do okay. Energy I like right now. We're already past the short-term support level. Industrial, we got to wait a little bit because it might have been already priced into the market. Consumer staples, be cautious on that. Basic materials, be careful right now. We might have peaked on them. Utilities, I'm a little cautious. I actually think consumer staples are going to go up. Now, here's what I do like right now. I like the communication sector. I like the technology sector, although the technology sector is a little overbought. I like the healthcare a lot, actually, right now, and I like the communication. I like these breakouts that are low volatility. So I do like these three. I like the technology. I like the communication. I like healthcare. Real estate is looking good. It looks like it's going to pop back up. And consumer discretionary is just going crazy right now. And that has a lot to do with the Fed data showing that consumer spending is, in fact, increasing, and the relief from the bond market that the Fed is not going to take any major action. That's what you're seeing right here. That's the relief rally in consumer discretionary stocks. That's what the big relief rally was after the Fed announcement. And it may be a little too much too fast. But I do like consumer discretionary. I like real estate. I like healthcare. I like technology. And I like communication right now. Now, let's look at some stocks that are on my watch list. Equity Lifestyle Property, ELS. All right. I like this stock. I like the fact that the RSI is coming back to neutrality. I would probably wait for it to pull back just a little bit more. If you look at what the stock does, you will see here that it's a real estate investment trust. And again, remember, businesses, companies, things are coming back to normality. When things come back to normality, real estate investment trusts usually do really well. And this one is already doing well. Again, you may want to wait for a pullback to the 74 level, but I like this stock quite a lot, not quite alike, quite a lot. And on a short side, I haven't given you a short in a while. I'm actually starting to get bearish on the Under Armour company. It looks like it swung high, couldn't take a higher high, has been trading under the 50-day line, has been completely fading the market, made a new 90-day low and a 10-day high, and it looks like it's backing away down, and it's going to continue this trend. RSI is, again, neutral. It's not too impacted by this. And again, I would sell this at the 50-day line. And the best part is here. If it starts trading, if it has 2 trading sessions above the 50-day moving average, like it hasn't in a long time, you get out of it. But I think this thing is going to back up and continue trading lower. So again, on the long side, we got ELS, we got the Equity Lifestyle Properties. And on the short side, right here, that's the ELS. And on the short side, we got UAA. And again, this week, be very cautious. This is not a time to be a hero. The markets are a little overextended, so you do not want to be a bully right now. Don't try to bull yourself into this market, or you may end up being on the wrong side. So you got to be really, really careful right now. Now, folks, before I let you go, I've got something important, something timely, and something you need to pay attention to. Imagine a strategy existed that allowed investors, just like you, to make money regardless of the direction of the stock market. So if the market goes up, you make money. If the market goes down, you make money. And if the market goes sideways, you make money. Without having to guess which news stories will hit, what earnings will be, what direction the bond market will move. Sign me up for this. I like this. Folks, stop imagining. It's here. Wall Street legend Chuck Hughes has a brand new strategy that's giving everyday traders like you the chance to profit on thousands of stocks, regardless if the market's going up, down, or trading sideways. Investors are lining up to learn more about this strategy, folks. It's happening, especially with how vulnerable the markets are right now. We're near all-time highs, but the market sentiment is telling us a different story, especially with bonds rising again. This is a recipe for volatility, and that's when Chuck has his best moments. Interest rates could make some moves later on this summer, so now's the time to prepare before the big players on Wall Street make the moves in the markets. Want to know about this strategy? How it's even possible? Learn all about it? Click on the link below to learn more about the weekly profit generator. Folks, you don't want to miss it. Chuck will show you how to make money, up market, down market, sideways market, with accuracy of up to like 96%. It's insane. But Chuck is a heavyweight trading champion. You should expect this from him. Follow the link below. Learn more about the weekly profit generator before we take it offline, because the sales have been crazy and the performance has been great. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post new videos, and have an amazing, amazing week. Let me show you where I'm at. I'm in Bahamas right now. Look at where I'm at. Isn't that something? Isn't that beautiful? Look at that.